ladies and gentlemen, and thank you all very much for coming today to our meeting, How to Leave the EU, Next Steps for Financial Services. This meeting marks the launch of our new publication by Barnabas Reynolds, A Blueprint for Brexit, the Future of Global Financial Services and Markets in the UK. Barney is a partner of Shearman and Sterling. He heads the practice in UK and EU regulation and financial services. He does the advising on all those practices. He will be joined on the platform shortly. On his way back from the airport is Paul Swann, the president of ICE Clear Europe. And on my right, I have to say what a pleasure it is to introduce Lord Bridges of Headley. George Bridges has been a peer since 2015, and before that, he's been a devoted public service in helping and advising, first of all, John Major as political secretary, and subsequently in the advice he has given to the Conservative Research Department in many capacities.
I'll just say just a very brief few remarks, and thank you very much for inviting me, Sheila, and it's a great pleasure to be here. Even though this is under the Chatham House rule, I'm going to have to disappoint those of you who feel that I'm going to be lifting my trouser leg and showing you a bit of ankle as regards government thinking on our approach to Brexit, and specifically as regards financial services. As you will all know, the Prime Minister has made it very clear that we are in the process of assimilating all the evidence to help us understand all the options available to us when it comes to negotiating with the European Union. There is an enormous amount of work going on right across government. Obviously, our department, which is 250 or so people and growing rapidly, is just at the hub of it, and the Treasury, as regards financial services, is playing an enormously valuable and crucial role in assimilating the views of the city as we proceed. This report today is a very, very welcome contribution to the debate. It's a debate that all of you know is an incredibly complex one, one where glib soundbites actually don't get to the bottom of the detail and the complexity that we need to understand. That said, I'm a strong believer, having worked in business for much of my career when I wasn't working in politics, I'm a strong believer that when you're faced with a complex problem in business, you need to understand the complexity but not be overwhelmed by it. And what we need to do is to assimilate, as I say, the views of experts like Barney and others here on issues such as equivalence and passporting and options open to us, and to understand how different parts of the ecosystem of the city are affected. Other people, to mix my metaphors, have referred to the city as being a tower of Jenga, and therefore if you pull out one brick, the whole tower may descend. It'll be interesting to hear the views of those of you here today as to whether you agree with that, disagree with that, etc. I'm sorry to say that, therefore, as a sort of the warm-up act for Barney, I'm not going to go very much further. It's always good for a politician to be a warm-up act to a lawyer, I always think. Anyway. Also, I hope you'll forgive me, there are a few other things that are happening at the office today, you may have seen, so I may not be able to stay for the entire debate, but I'm sure, Sheila, you'll be able to fill me in.
Well, thank you very much, George. Thank you very much indeed. Barney Reynolds.
Thank you, Sheila, and thank you, George. Particularly for sparing the time on a day like this to come and talk to us. Essentially, the debate around financial services has been very unsatisfactory since the vote, because there's been a massive amount of rerunning of all of the debate in the run-up to the vote, and a lot of skewed analysis in order to achieve an outcome. And the outcome from many quarters has been that the UK should approach this on its knees and effectively go to the EU and ask for effectively some sort of continuation in one form or another. The latest sort of BBA version is a grand bilateral deal, a continuation of a passporting arrangement. And there are four issues of sovereignty with that whole proposition, which I think are insurmountable. The fourth one certainly, the other three probably. They are, first of all, passporting involves the application. Oh, Paul, please come and join us up here. Thank you very much. So, Paul Swann from ICE Clear Europe.
Hello, Paul. We introduced you in your absence. Thanks for coming.
Literally landed at Heathrow about an hour and a half ago, so my apologies.
And Paul, Lord Bridges. Yeah.
Nice to meet you.
So, the four problems with passporting, or some version of it, are that it involves applying a common set of rules across the EU, and those need to be interpreted in the same way, and they're interpreted by the ECJ, the European Court of Justice, but the Prime Minister has ruled out being subject to the jurisdiction of the ECJ going forward. Conceivably, they'd say, oh, well, you've got a fabulous court system. We'll let you have yours for interpreting these things, and we'll have a committee to sort of bridge any gaps. So the second issue then is the ESAs, the European supervisory agencies that sit on top of the national regulators and seek to harmonise interpretations under the ECJ sort of thinking, and have step-in rights to come into our country and regulate institutions directly in extremis. That seems to me to be unacceptable for similar reasons. Maybe they would say, though, that we've got a great set of regulators and they will trust us to do that. The third one's immigration and freedom of movement, and we all know the sensitivities around that topic. But conceivably there could be a deal for the city of London that allows free movement and sort of overcomes that issue of sensitivity in Europe. The fourth one seems to be insuperable, though, and that is that they're European laws, European rules made in Europe for the passport to work. And those rules are made by the Council, in which we'd have no voice, and the European Parliament, even if we were given a synthetic voting process in the Council to get us back to our qualified majority voting rights that we have now in the Council. And I'm not sure that's achievable, but even if it were to be, we haven't got any MEPs. And the law would go into Parliament and be amended by people that are elected by other countries with no interest in the success of the financial markets, and some of them having a very different idea of the purpose of the financial markets, not being a market in themselves, which is our vision of free market, but actually something that's purely there to service their domestic industrial infrastructure. So passporting, I don't think, works on any analysis. There are only two executable solutions to this situation, given what we've decided to do. The first is an expanded equivalence model, and the other is a financial centre model, which is a go-it-alone model. The second one, we have to have a go-it-alone version. The second one doesn't require any agreement at all. On the expanded equivalence model, first of all, I should take a step back. Most of what happens in the city is not cross-border in law at all. There's a complete fundamental mistake in much of the analysis, which presumes that whenever you deal with someone who's got a foreign-sounding name, it's cross-border. That's not true. For the bit of business that actually is cross-border, there are a range of regimes under existing European legislation, EU legislation, providing that if you have equivalent rules in your country, a third country, which is what we would be, we will be, you will have the same access as if you had passporting. That comes with no strings attached. That doesn't come with the four freedoms. That doesn't come with any of the encroachments on sovereignty I've mentioned. And so under the equivalence model, so long as we demonstrate to Europe, and they would want the same from us, by the way, because they're going to need continuing access to the city, which is a European asset, the only financial centre in this time zone, they would agree to grant us equivalence if we have similar, not identical, laws. Now, there are various statements as to what equivalence means. Barnier himself has said equivalence, really for the wholesale markets, focuses on things that would otherwise prejudice European systemic risk. Very sensible. And actually, there's an awful lot of European law that doesn't have any impact on that if we remove it from our system. We should take the opportunity to remove laws relating to EU competition. Laws related, and that should be a matter of national sovereignty anyway, laws relating to the single market, and laws that are completely OTOs or redundant that we're all familiar with in the city, such as double-sided reporting of trades rather than single, which is what the US and other countries do under EMIR for derivatives. And, for instance, reporting of trades to trade repositories for futures where the central counterparties like pools already have all of that data. There's an awful lot of redundant process in European law. We'd strip that out, do things our own way, but we'd nevertheless be somewhat constrained because in order to go down this route, we'd have to apply, as we would do, international standards with a little bit of a European twist to get equivalence. On this model, we would ask them to fill in the relatively minor commercial holes that there are to the equivalence panoply, for instance, for lending and primary insurance, which I think they'd do because as a matter of principle, that would give them access to products which I hypothesize are equivalent from other countries, thereby deepening the capital markets push which they've got under CMU and more generally, and for the Eurozone. And you would also have, all of that I've just described would be available to the whole world, not just the UK. No special deal here on the substance of the law. In addition to that, there would be a deal with Europe, between the Europeans and the UK, not on substance, but on the process around equivalence in two directions. They're getting equivalence-based access to us, which is hugely important, for instance, for the European banks operating through branches here, which is something generally that the UK doesn't permit for systemic risk reasons. It's a hugely risky thing to allow. But we do that through the passport. We could extend that through equivalence. And vice versa, our institutions would get equivalence-based access to them, and we would determine that upon exit there'd be a grand declaration of UK equivalence on the basis of the regime where we've amended it as I've described, and there would be processes around notice periods and working together on new topics and so on. I think that's achievable. I think it's in Europe's interests. I think it's the economically and financially rational result. It's not worth it at any price. If equivalence, we've had some sort of statements already from Europe saying, oh, well, equivalence means basically identical rules. In some quarters they've said that. Now, that's contrary to the law. It's contrary to what they've done with the United States, Singapore, Mexico, and other countries. But if this is entirely politicised, and I suppose we've got no entitlement to the opposite, and equivalence means, in Alice in Wonderland terms, what they say it means, then it's not worth having. And we need to be prepared for that eventuality. And it may also not be forthcoming on exit, and we need to be prepared for that eventuality. The other model, which is actually not just equally as good, can be made to be better, is the more go-it-alone model, the financial centre model. Why? Because there we apply global standards that we've created from Basel, IOSCO and so on, but those are pretty light touch and loose and require focus at individual country levels. And we free ourselves from the whole panoply of restrictive, compromise-driven, negotiated sort of rules at European level and be able to do it in a far more sophisticated way ourselves, focusing again on outcomes rather than redundant processes. There's an immense industry in the city, within institutions and outside institutions, looking at processes created by European regulations, which are not replicated in other places or are done differently in other places. We have our own way of doing this. But it's displacement activity, it's misdirected. As we can see from the current crisis in the Eurozone banks, none of that is being ameliorated by EU regulation. In fact, quite the contrary. And in fact, the credit crunch, people blame the UK for it. The UK was applying European regulation, in fact, gold-plated in some ways. So the whole light-touch critique of UK regulation is flawed. In fact, European regulation set a bedrock of rules across Europe, which were then overtly not applied by at least two countries I can think of, that were trying to basically take business from London on the basis they didn't apply the rules at all. And I've had clients asked to move to those countries on the basis that they overlook certain European rules. In that situation, obviously the FSA had to engage in light touch and competitive-driven regulation, as it should have done. And I'm not sure there was much alternative. It was because of the very unsatisfactory framework of European regulation, however, that it had to do so. It wasn't caused by us, it was actually caused by this rule framework. Those are the two executable options. The financial centre model needs to be made to be very attractive. We really need to put the effort and thought into this, and I hope the government commissions either itself or commissions someone to do a very quick analysis of that over the next month or so before banks start pulling triggers to start moving bits and pieces or go blind for licences unnecessarily, because there's sort of an extra-ability to that. And what they need to see, what institutions need to see, is what the UK will look like on a base case. And we need to rethink this stuff, which we mostly came up with in the first place, the Turner Review, the Bank of England behind the Living Will and RRP framework and so on. It's mainly British, most of this stuff, embellished to high heaven in Europe. And then in various bits where they didn't do it properly, we've had to go plate ourselves. We'd redo the whole lot. If we show what that looks like in a way that's attractive, with all of the other attractions of London to businesses, then I think you're going to get a very different outcome to the current dialogue in the newspapers and from various quarters in the industry. Then the customers and counterparties in Europe will come back to come back to London, because the magnetism will be fully rekindled here, and you'll have a situation where, as I say, most of the market's here anyway, and anyone wanting to access cheap and attractive capital on the right terms is going to actually do so, if they're in the wholesale markets, through affiliates here, and we'll find a solution for retail people to do so if they want. Now, on that model, on either model, if Europe wants to be protectionist, and that's what this discussion is sort of about, and where you've got the fear factor stuff in the media, if they want to be protectionist, They can be. If we're going to be sovereign, we can't have a veto on them making rules that we don't like and rules that penalise cross-border business from Europeans into the EU. So we could allow, German and French corporates and Italian corporates to use affiliates here on a tax-free basis to receive loans, to receive insurance and payouts for the benefit of their group. But in theory, the Europeans could then tax the money on the way in and make that a little bit more expensive. But who suffers from that? They suffer. Their consumers, their customers just pay more for the services. Economically, it's not a rational thing to do, and the people who suffer from protectionism are the people who do the protectionism themselves. It's not the city that suffers. So a lot of the dialogue and discourse and intellectual endeavour that's been focused on all of this since the vote has been completely misdirected at recreating on terrible terms something which comes with a massive price tag in the first place, which is EU regulation, in an unachievable way. What we need to focus our efforts on is what we can deliver, making the city as attractive as it can be for those who wish to come here on the right terms. That's the financial centre model. I actually think they'll clamour for the equivalence-based model when they see that, which is why we need to get on with this quickly, at which point we need to check that equivalence is not being interpreted in an arbitrary way, and it's actually attractive. A couple of final words. Euro clearing, and Paul can speak to this better than anyone in the room, or anyone in the city. The ultimate expert on the topic. Euro clearing, we shouldn't give up, we don't need to give up. Every financial market clears the five main currencies. The idea that we give this up in order to get a deal, which we don't have to do, by the way, is utterly absurd. Obviously, Hollande said he wants this, but so what? He can't legislate for London. Now, what he could do, what the Europeans could do, if they wish, if he's still in power, by the way, if they wish, is they could make it a rule that European institutions can only clear in European-approved central counterparties which are in the Eurozone or on the continent or in Europe, the EU in some way. They can do that. That's protectionism. But that's a small slice of the market. The bulk of the market will continue here in euro and other currencies. There needs to be offsetting between the various currencies. It has to be here. We need to facilitate that. We shouldn't give it up. The bit that they insist on being in Europe is just going to be prohibitively expensive for their businesses. And when the businesses see the price tag to that, I think they'll be clamouring for the opposite. So the euro clearing debate is a complete misdirection again. Finally, I've set all of the detail of this out in the book, but obviously one can't produce something in this pace at this speed of time and this level of detail without an awful lot of help. I'd like in particular to thank Oliver Lynch, who's sitting just here, for a very extensive help and work on this. And then also Azuria Chang and David Frost, who are in the room, and there are others who aren't, and most notably Thomas Donegan, who helped as well. For all of those, many thanks, but I hope it's useful and interesting in informing this debate.
Thank you very much, Barney. Thank you very much, Barney. And I'm now going to call on Paul Swann. I hope, Paul, you've got your breath back. Ladies and gentlemen, may I just remind you that this discussion is held under Chatham House rules, and it may not be reported anything other than what Barney, our author, says as part of his great project. Right, Paul, please.
First off, can I say thank you to Lydia and to Barney for the opportunity to speak to you just for a few minutes. It's always very difficult to follow Barney. I seem to have been doing that for many years now, Barney, as you've helped us through the exercise of setting up some of our businesses in the UK. There was a couple of points I thought that were worth just drawing out from a practitioner's perspective. And just to give you a little bit of background, I'm Paul Swann, I'm the President and Chief Operating Officer of Ice Clear Europe, which was the second clearinghouse to be set up in the UK after the London Clearinghouse. We set it up back in 2008 in order to clear ICE's energy products in the UK, and subsequent to that we've gone on to integrate a number of other clearing services, including interest rates, equities and credit default swaps. So it's now the second or third largest central counterparty in Europe, and the two largest, there's a sort of bit of a debate about whether Eurex in Germany is of similar scale or not. The two of the largest of those are located here in the UK. There are good reasons why we located in the UK, and I think it actually comes to the core of the paper. We don't operate European markets in the UK. We operate global markets, and we give customers from the globe access to products which enable them to carry out risk management activities. And I think one of the important points that Barney draws out here is that there's a mutual benefit to both the EU and the UK in keeping the pipelines to those markets open. There's, for the first time in the debate, real detail in the paper around how that could be done and a number of options that could be applied to achieve that outcome. ICE has always been a significant investor in the UK. We would like to continue to do that. Clearly we're a commercial business and we have to respond to the circumstances and environment that we ultimately operate in. The second point I want to pick up was that the rules from Europe have, as Barney sets out in the paper, in some cases in some detail and I think very eloquently in his presentation, gone beyond what's required from a systemic risk perspective. We fundamentally believe in strong systemically managed markets and financial services. But some of the externalities that have come about from Europe have constricted and constrained the way that some of our markets have been able to develop. And freed of those, I think we could actually develop our markets in a much more business and user-friendly way than we have in some cases as a consequence of some of the European legislation that we've had to deal with. I think it's really important, and Barney does pick up the point, that the EU remains important to UK financial services, and we want to be able to maintain access. But that has to be on a mutual basis. Both sides have to want to achieve that outcome, and I think you made the point a couple of times in the few words that you said, Barney, about the debate becoming politicised and non-rational. I think this is an enormous help, actually, and I'd commend, if you haven't had a chance to read it, a little early yet, but when you have had a chance to read it, it's great help because Barney's actually gone much deeper into the detail as to a number of ways that we can achieve that outcome without focusing on just one solution, which may not be politically achievable. And I don't want to repeat what you've already said. I think you set out very well why it may not be politically achievable. That's about as much as I wanted to say. So if I sit down...
Righto, Paul. That's really very good. Thank you very much indeed. That's hugely helpful for our discussion. First of all, I want to thank our wonderful panel, Paul Swann, you're a hero to come here from Heathrow, and speak as you did, and Barney for writing such a marvellous piece, and George Lord Bridges, in his absence, he has to go back to a busy day, shall we say, at his department, Brexit. However, may I say that we've had a very stimulating discussion today. We've heard Barney put forward two proposals, and I was delighted that it took a lady at the back of the room to come forward and say, here, here, this is the clearest thing that I have liked in all these weeks of muddle.